Congratulations! If you're watching this, it means you've been pre-approved. In the next couple of minutes, I'll explain what pre-approval really means, what to expect as you start shopping, the upfront costs that typically come up once you go under contract, and the most important do's and don'ts so you don't accidentally create delays. A pre-approval is a strong first step. It means we've reviewed your initial information, income, credit, debts, and assets, and we've identified a loan amount and program that you appear to qualify for based on what we know today. It is not the same as a final approval. Final approval happens after you're under contract and underwriting has reviewed the full file, the appraisal is completed, and all conditions are clear. Think of the pre-approval amount as a ceiling, not necessarily the goal. The smarter way to shop is by your monthly payment, principal and interest, taxes, insurance, and any HOA. Once you start looking at different homes, you can send us listings. We can tighten the estimate so you shop with confidence. If you haven't already done a quick strategy call with me, I recommend it. In about 20 to 30 minutes, we'll confirm your target monthly payment range, estimated cash to close expectations, and anything we want to avoid during the process. If you want to schedule that call now, pause here, reach out by call, text, or email, and we'll get that scheduled. Next, you and your realtor will tour homes, narrow down neighborhoods, and decide on an offer price. Once your offer is accepted, the transaction moves fast, and that's when a few upfront expenses usually come into play. After a contract is established and signed, there are usually 3 common upfront costs. First is the home inspection, paid to a licensed inspector. Second is the earnest money deposit, paid to the title company and typically credited at closing. Third is the appraisal fee, which is usually paid up front before the appraisal is scheduled. This is also typically credited at closing. The inspection is a third-party review of the home's major systems, such as the roof, HVAC, plumbing, and electrical. It helps you understand the condition of the home and can support repair negotiations. It's usually paid out of pocket and is typically not credited back at closing. Your realtor should be able to guide you on the timing and who to use. A typical range is a few $100s, depending on the size and type of property. Earnest money is your good faith deposit submitted to the title company after contract execution. It shows the seller you're serious and helps take the home off the market while you complete financing and inspections. The amount varies by contract and market. Your realtor will advise you, but it's often tied to the purchase price. In most cases, it is credited toward your closing costs in the final accounting. It's important to remember that earnest money must be paid in a way that's easy to document. Avoid cash. The appraisal determines the home's market value and checks basic lender requirements related to safety and habitability. Appraisers are independent third parties, and the fee is usually paid up front before the appraisal is scheduled. This fee is usually also credited towards closing costs during final accounting. Once the contract is signed, we move into processing and underwriting. Processing collects documentation and prepares the file for underwriting. Underwriting reviews the full file and may issue conditions or requirements. During underwriting, it's normal to be asked for additional documentation, even if you've already provided similar items. That's part of the lender's review and quality control process. Timelines vary based on the loan program, the property, the appraisal process, and how quickly documentation is received. In many purchase transactions, you'll see a closing timeline measured in weeks, not months, but the exact timing depends on the contract and the specifics of the file. Once the lender's underwriters approve the entire file and confirm that all requirements have been fulfilled, the file will be given the oh-so-sweet status of clear to close. Those will be the best 3 little words that you'll hear during this entire process. Here are a few best practices that will help keep the loan process as smooth as possible. Do keep your credit, employment, and accounts stable. Do respond quickly when we request items. Do keep as much money in the bank as possible. I tell my clients to live off of ramen noodles. Please try not to go out to eat all the time. Do pay for your earnest money and your appraisal through your bank account. You can pay for both of these with the credit card, but it makes things really complicated, so try to pay for it out of your bank account. Do let me know prior to visiting any local builders. If you're going to look at new construction, please let me know. There's some pros and cons to new homes, and a lot of times I know a sales representative at that builder. If you tell me ahead of time, I can pair you up with a really good sales representative that I've worked with in the past, and I can still process your loan. Do keep a positive attitude while you're going through the loan process. Don't open new credit, co-sign, or take on new monthly obligations. Don't move large sums or making large cash deposits without checking first, because those usually need to be sourced and documented. Don't change jobs or compensation structure without checking with me first. Don't withdraw all of your down payment from your bank account. Some people think, hey, I'm pre-approved, I'm under contract, I'm going to go take out $10,000 from the bank and put it in my sock drawers so that I don't spend it. Please don't do that. Don't allow anyone to pull your credit. Don't give up right away. Sometimes it takes a while. I tell people that sometimes the perfect house finds them, rather than them finding that perfect house. It might feel like, oh man, I've looked at 20 to 30 houses and just can't find the right one, or I can't get my offer accepted. Just hang in there. Think of the mortgage process like a flight plan. The takeoff is the pre-approval. Exciting, moving fast, everything feels new. The middle of the flight is underwriting. Sometimes a little bumpy because documentation gets reviewed line by line. The destination and ultimate goal is clear to close. My role is to keep you informed, set expectations early, and work through conditions quickly so we stay on course and get you to the closing table as smoothly as possible. Before big financial changes, check in first. It can save days. If you have questions at any point, do not hesitate to reach out. If you're about to do anything financial that feels out of the ordinary, check in first. Congratulations again! Let's go find the right home and get you to the closing table.